So if you are interested in building a home and need financing for the purchase of the land and/or the construction of the house itself, this video is going to give you an understanding of how it works. All construction financing basically works the same way, whether for the construction of a new home or the major renovation of an existing one. You get a predetermined line of credit to draw upon for the construction of the home. Once the home is complete and all of the construction financing has been used, you can close out the temporary construction financing with your permanent end financing, usually a 15 or a 30-year fixed rate. The first step in the process is to get pre-approved. That is where you share with me what your sources of income are and how much you make. We'll compare your income with what you have for monthly obligations like automobile loans and credit cards, child support, etc. We'll also talk about how much of your own cash you have to put towards this project, or if you own the land already, how much equity you have. Once I check your credit, I'll be able to tell you if you qualify for the financing that you're going to need. The second step is to provide me with what information you have on the land and, most importantly, the plans and specifications on the home that you're building. You'll then make formal application, which includes signing a bunch of application forms and providing your most recent 2 years of tax returns, 2 months of bank statements, and 2 weeks of pay stubs. Your plans and specifications will be used to order an appraisal to make sure the home that you are building will be worth what you'll be investing into it. While the appraisal is being generated, you'll be working on the third part of the process, putting together septic designs, builder's risk insurance, a construction contract with your builder or major subs, and a budget. All of your information will be provided to a construction management team for their review. Now, their job is to make sure that there are no disconnects like restrictive covenants or town ordinances that would prevent you from completing your project. They study your budget to make sure that your builder doesn't get more money dispersed to them than the value of the work completed at any point during the construction. So once you've passed muster with the construction management company and your loan is fully approved with any required updated bank statements or pay stubs, you'll proceed to a closing. You'll sign even more paperwork, but this time you're not applying for the financing, you're actually getting it. Interest will start accruing on the amounts that you've drawn, and your builder can focus on building your home, secure in the knowledge that the money needed is available. As your home is nearing completion, it's common to make changes to the amount of your permanent end loan, depending upon cost overages, underages, additional preference items that you added during construction, and any additional savings that you might have to put towards reducing the end loan amount. Once the construction is complete and you have the certificate of occupancy from your town, you can close out the temporary construction financing with your permanent end financing and live, hopefully, happily ever after. I hope this video helped you to better understand the fundamentals of construction financing. There are a number of topics and things that I did not cover in this video, and I'm happy to chat with you about them, like the difference between a single close and a double close construction loan, rate lock options for the end loan, financing differences for modular and panelized home, and paying interest during construction, or even acting as your own general contractor. If you have questions regarding any of these topics or are ready to get started on your construction loan, give me a call here in New Hampshire at 471-9300. That's 471-9300.
The name to know when you're buying a home, Charles.